Good afternoon, everybody. This is we're following a great presentation, which was fascinating for me. So my name is Howard Cohen. I'm an advisor with Strategies for Wealth, and this is my fourth or fifth time being a moderator for one of Marty's groups, and I always appreciate the opportunity. Pete is here. He'll introduce himself in a moment. This is truly a panel that is something that we wouldn't have thought about several years ago. We have Lale, who is in Dubai, and Pat, who's, I believe, yesterday he was in Houston, today he's in Los Angeles.
Yep.
So I guess I could have stayed in New Jersey. So what I'm going to ask is first, everybody take a couple of minutes to introduce themselves. Don't take too much time doing that so we can dive into our questions, and then it'll be followed up by Pete introducing himself here. And I'll say a few words about myself after. Lale?
Sure. First of all, Marty, thank you for having me here on the panel. It's been a really high energy day so far, and the conversation prior was really quite robust and really great to hear some of the folks and the questions that were coming. So my name is Lale Faheem. I'm a founder of a startup studio called HEALTHTECHTURE, and it's a very young organization or setup. And the genesis of that is really that I play or have played through my experiences a multiplier effect with my own sort of scientific curiosity. I'm not a major in any scientific discipline, but I've just sort of figured it out along the way, and I'm still learning and absorbing and truly enjoying the space I'm in. But then have also combined it with sort of the investor and the deal acumen and the operational mindset. So have come in at inflection points, and during the COVID period, decided to take that up a notch and found the startup studio. My background is a bit untraditional because I started at GE, where it was about just sinking and swimming of figuring out how to operate a business. And from that pedigree, moved into investment banking at Credit Suisse in New York. And that was, typical M&A banker life. But for me, it was actually being just part of very interesting conversations and being a partner. From that, I found my passion in healthcare, really my purpose in being there, and really enjoyed the space, and then actually moved into a principal by joining Mundi Pharma and actually working in emerging markets, covering Asia Pac, Latin America, Middle East, Africa, and building out the business from sub 100 to $1 billion top line, and being able to deploy and raise and deploy about $1 billion capital across various therapeutic areas, and then really pushing the needle to go into diagnostic and medical devices, which was not, original mandate. So it's been just a fantastic journey in being able to do that and participating in that. And so just trying to now spend time in figuring out both what a startup is with my own startup studio, and as well working with some really great founders and entrepreneurs who are now taking their ventures forward and working with them through that journey.
Pat?
Yeah, so I recently spun out of a big multifamily office / asset manager to start Iron Pine Ventures with two families, or really three families, to back us. We invest in Series B and above. We have a machine, and we invest in some Series A, but it's pretty selective. We have a machine learning background, and so we use AI and ML to help drive and make more informed decisions on the investment side. So we're raising $250 million, but $100 million committed, and we're also making co-investments as well for opportunities. So pretty agnostic though.
Go.
Good afternoon, everyone. As I mentioned this morning when I did the intro, I'm actually, my main expertise is intellectual property and patent law. When I joined, I used to work for a big law firm where we'd buy companies. My main client was Cardinal Health, so mostly in the healthcare space. When I joined Polsinelli 6 years ago, we are 22 offices now and 950 attorneys. I went to the startup side, so I'm representing 20 to 30 startups, probably helping out another 20 or 30 startups in the advice stage. All of the companies need capital, so I started hosting these family office investor meetings, and I get involved in a lot of deal flow. So to give you an example, some recent work I'll get into is you'll see DARPA will be here tomorrow speaking about their investment portfolio, what they plan on doing. Obviously, it's a government, so it's a multi-billion-dollar opportunity. So we're going to be looking at national security kind of focused companies. Then two other recent investors. One's going to be setting up a $30 to $50 million fund to start, and then I'll send them deal flow. And then the other one's setting up a $5 to $10 million fund to start. For those opportunities, I'll bring in my corporate team. I'll bring in my fund formation team. We'll manage all the legal side, but then when it gets to the point of deploying capital, whether it's for DARPA or others, you hope to make certain recommendations. So although my expertise is on the patent side, a lot of what I do is just connecting people to capital and capital flow. So it's something I monitor all the time. So that's, I'll say, to start.
And my name is Howard Cohen. I'm an advisor with Strategies for Wealth. Strategies has been around since the early 30s. And I work with business owners and high net worth individuals. And my primary focus is showing them how to eliminate exposure to transfer taxes forever. And that's what I do, making sure that they avoid transfer taxes forever. And also work with business owners on their buy-sell agreements, making sure that they're funded properly, and also on executive benefits and employee benefits. So to start, Lale, why venture capital? And how did you get, well, you gave a little bit of a background of how you got here. So funny to say to somebody how you got here, but you're in Dubai.
Yeah. So there are two elements to that. One was just as, first I was investing on working for firms and investing their capital. And I decided, well, why don't I try to actually push the needle and think about really disruptive businesses, both create them as a startup studio, and as well as work with others who are really good with their ideas and bring them forward. And the thesis was, first of all, substance over form. I'm a big believer in, a bit old school, where I'm not entirely quite entrepreneurial enough to be so bullish. So I really look at substance and trying to create operating models that work. So the first venture that pushed on, because I'm really passionate about it again, is around the elder care or the elderly care space, and putting out a digital format of personalized health and taking that forward. So that's now on the ground, where there's data and evidence being collected on actually intervening. So there's cost reduction, there's clinical data coming, or non-clinical data that's coming through, as well as really having a different both physician and patient experience. So that gave a lot of confidence in myself and what we were able to do, and bring really smart people on the ground to do that, to then say, okay, how can now bridge the conversation with founders and entrepreneurs, where especially in emerging markets, there's really a gap in mentoring them to take their ideas into a commercial model and being able to bridge that. So bringing all that I had actually done over the years and saying, how can I work with a number of really great ideas and organizations or small setups and taking that forward. It's a bit of personal focus but backed by the experiences that I've had.
Pat, what do you think of venture, short-term, long-term?
Yeah, so I think generally speaking, everybody over the long term should have allocations to venture. It's shown sort of like the highest amount of alpha compared to a lot of the other asset classes. I think what's interesting in the short term is a lot of people, because it doesn't get marked to market all the time, the same way like an equity market does. I think there's a misunderstanding that venture hasn't really taken a hit, when in reality, I think valuations are down like somewhere between 70 and 80%. And so, in fact, it's taken a much bigger hit than the equity markets. And so one of the things that I feel like in the short term, and then also the long term, is, this is one of the better entry points I've ever seen in the venture market. And I feel like there's there's opportunities where companies are thriving, and you're able to get into a company that is, cash flowing, that is a market leader, that is, at like 2 or 3x sales, 2 or 3x revenue, and which is pretty unheard of in this market. And particularly last year, when sometimes you were paying 10 to 20x those numbers. And so it's just a great opportunity to be a venture investor right now and be deploying capital in that space. So, yeah.
Just on the venture space, what I'd say is we have 50 to 75 people in the New York office going in and out of the meetings, and plenty of people speaking outside the room. I spoke to a gentleman this morning, an investor, that he put a fair amount of money into a company when it was valued at $9 million. That was a number of years ago, and now they got a couple of term sheets for $1 billion on the deal. So venture, I always think it's quite the adventure when you get involved in them. And a lot of the work I do with the spinouts from universities and others is very early stage, but now we're doing lots more Series A, Series A and Series B work and so on. With the bigger companies, you're getting involved in the more the sovereign wealth funds, Qatar, UAE, all these countries have these wealth funds, Norway and so on, and they're looking for later stage. But you get involved in, to answer Howard's question, you get involved because capital is such the need to do things. And what I found with the family offices, each one has their specific niche that they want to invest in. And once you find that, which I'm always searching for and represent a fair amount of family offices, then it's I want to say easier, but to find a startup in that space normally works pretty well. Marty mentioned psychedelics. Some of you may have seen the 60 Minutes show on psychedelics. There's been a lot of research. There was a full-page article a few months ago in the Wall Street Journal. We represent a number of companies in the psychedelic space with all the challenges we have in mental health. It's a huge area that's getting a lot of money invested in it. So that's one of many areas that's very exciting.
I guess there's research that just came out that kind of suggested that SSRIs don't work. They don't really handle the issue that they're supposed to handle. And that this is what makes some of the psychedelics so interesting, is that they're kind of a way of kind of reframing SSRIs. Some of them do work in the case of depression and things like that.
So what Pete's trying to say is that my generation got it right.
LSD.
So interesting. When you guys look at all your deals that you look at, do you ever consider like how well networked a deal is? Because a lot of times people come to me with a deal. I'm like, who are you? Where are you from? Who works for you? Who would you network this? Because a lot of people they don't network deals well, right? Like it's easier if you're getting a deal from a guy who went to Stanford, Harvard, MIT, one of those guys, because they kind of have like a whole chain of people that jump on deals, right? Whereas it's harder if you go to, Tulsa State, let's say, right?
Yeah.
So do you guys ever think about that? Because I mean, it is, you always say people are always looking for money.
Yep.
It's a hard journey.
Oh, it's a really hard journey. Yeah. What I'd say is, with all respect to Andrew and his last presentation, I get a lot of these presentations. I'm surprised they're not. You haven't heard about him beforehand. With all respect, because it seems like such a dynamic, amazing story he has. And we always works on repurposing drugs. That's just a common thing in IP and the venture space. So you know, you hear so many of these stories and you start scratching your head and you say, why isn't that funded? Why isn't that even bigger? And we do partnerships with J&J and others to do that. So
he's been doing it all himself.
Yeah, but Andrew's an easy to network guy, right? Because he's got all the credentials, right?
exactly.
Guys
Yeah,
who don't have credentials, I always say go hire somebody with credentials.
right. Well, that's
because otherwise it's going to be very hard for you to get into the network.
Well, that's the idea with the advisory board and who your board is, right? That's where the team becomes very important. So I'm sorry, Patton and Lale, jump in.
Yeah, I think generally speaking, the tough thing about venture as a whole is that it's who you know in a lot of ways, and I'm sure that's probably not a popular opinion, but it does feel a little bit like a boys and girls club a little bit at times, and I think making sure that you expand the net, like understanding what your network looks like, and if you can have people who can help you there, as Marty mentioned, I think it's very important, because you can have the best idea in the entire world, and if you don't know how to talk about it, you don't know how to talk to institutional investors about it, or even just angels, it's not going to get funded, and that's just the reality of it. And it's a little bit, it's like obviously not the best thing in the entire world, because you want the best ideas out there, but communication is key there, and who introduces you is key there. So.
John?
So
I echo many of these thoughts, because one of the areas that we focus on is what I call the valley of death, where literally great ideas, great IP, but it's really hard to then take it to a commercial scale. So for example, we have, I'm working with a ENT doctor that's renowned in Singapore, and she's based, she's a pedigree out of the National University of Singapore. And she's working on a glue ear surgery alternative. And that is like there are 18 million surgeries. It's 90% of them are children. It's just in the US, it's a 5 billion market. And yet, it's been really troublesome for her to take something that costs over 100,000 by insurance, and sometimes in many markets out of pocket, and bring that. So very much see that, and to Pat's point, knowing and having a right network around, not only from a capital perspective, but being able to communicate the story and the returns and what the value proposition and what the investment thesis is something that they're just not equipped to do. And that's a real gap.
John?
Yeah, so I've noticed a trend I operate in medical venture capital, that's what I do, but I've noticed more and more the formed VC funds are becoming more and more private equity oriented. At later stage, they want bigger and bigger deals. The size of the funds are getting larger and larger, and so there's a cadre of active angels, family offices, crowdfunding that are becoming the real seed capital, early stage investors, and it's almost as if venture is not practiced professionally anymore. It's you see what I'm saying?
It's becoming more growth private equity.
Yeah.
It's a fair point, actually. I think what I can't see you, but it's a fair point. A lot of those private equity firms and corporate VCs, I think, have issues, and the issue is that they've not that they're doing anything that's wrong, but check sizes are too big. Right. And you've seen it across the board with a lot of these companies. They're taking big checks, and in order to take those big checks, they have to also justify big valuations. And obviously the pullback has been great for VCs who are smaller, because you don't have to deal with these high valuations anymore. But they have to write these massive checks because they've raised so much money. They have so much dry powder. I think what's interesting is what I feel like is emerging, or specific managers are always sort of going to practice what you're talking about, which is, in like the 250, $500 million and below. And that's high, right? I would say that's on the high end, but $100 million and below in the early stage is where you're going to see a lot of alpha. Now, I can't do that. I'm not creative enough. Like my vision is not good enough to see some founder in a garage who's building the next Apple. But my hope is that I can deploy capital into that company after it has a little bit of market traction, et cetera. But no, I think it's a good point. It's a fair point. They're not really going for then it's not really traditional VC anymore. I mean, granted, there are some places where there are, but for the most part, it's not.
Yeah, just to John's point, I agree with Pat, and what we're seeing is more, and something I mentioned Cassie's name before, dear friend of mine, Dr. Peter Benuti, he tells a story, practicing orthopedic surgeon for 25 plus years. Like Andrew, he self-funded all his organizations. And he said years ago, this whole valley of death that Lale spoke about, he was able to sell or license the IP to companies and make money. Now they want a business plan. So it's almost private equity, much later stage. And what they say is, show me a revenue stream and then let me work on the scaling aspect. And that's where we're at now. So, to get to that point, you do need, as Marty said, your advisory team, the board members, you don't need a global manufacturing or distribution system, but you need to show the business plan that's real and much more focus on the business plan itself. You have the greatest technology. I can give you a list of companies we all know at great technology, but they're not getting to the point of commercialization. And DARPA will tell you that tomorrow. A lot of the famous institutions around the world will tell you that. So it's a great point.
What you're saying, though, especially in the medical sphere, if you present a business plan to investors and it's all around the technology, you have to have highly concentrated skill sets in the investor side in order to just take that in and make calculations of their own. They have knowledge of the market, but most business plans lack in the medical sphere. I don't know so much about high tech. They lack a credible go-to-market exposition and the strategies that they would deploy, the push and pull of the marketplace, potential competition, price points. All of those things are very, very important in the evolution of the company towards success. Because as you say, without those, you have a technology.
Yeah.
Without having a business.
Yeah, you're exactly right.
So too many of the companies are presented as companies that are really projects and not projects that should become companies. And that's one of the real reasons why the valley of death begins to gap and open up. Because the early adopters have gotten in at very low prices. They've arrived at a certain amount of de-risking, but not enough for the big guys. And so the big guys ignore that gap. The early ones don't have the wherewithal necessary to fill the gap. And so it begs the question is, why aren't there opportunists who come in and specialize in filling the valley of death?
Yeah. Lale, you want to jump in?
Yeah, actually, that's a great question. And the reality is that there is certain institutions that are playing a part in that and stepping in. So the Huntington family, for example, they've stepped in to actually play a role in this specific area. And it started with an endowment, and then they said they wanted to, and I think someone was asking about the operational element, and there is starting to come together where they are bringing in other business people to the investment conversation to then help those founders, those entrepreneurs take that forward. And it is nice to see some of these, some of this movement come in, but it's definitely not enough. Because it has evolved, the VC landscape has become a little bit confusing, to be honest, because it's almost getting mixed with sort of this growth capital element. So even, Pete talked about some of the sovereign wealth funds. And for example, in the UAE, even in Singapore, Temasek, the likes of Temasek, GIC, more so Temasek than GIC, and the likes of here Mubadala, they're teaming up and creating sort of smaller funds, smaller groups that can be more VC than historically they have thought about, because they are seeing that they need to serve up to this community to get it energized and nourished. Otherwise, literally, it will be a valley of death just by itself. So there are some positive indications, but I don't think enough. However, given valuations, pullback, and so forth, it also pulls out those commercial and business models that actually never made sense. To your earlier point, they were great projects, but they don't really have substance. And so this whole argument of a substance over form, some of the pullback has helped in filtering out those that should not have been there to begin with.
So moving on a little, Pat, where do you see the most attractive opportunities for VC right now?
Yeah, I think, as I mentioned, I think there's a lot of the valuations are really been skewed quite a bit, especially in sort of the crossover market, which I think is sort of interesting, because a lot of the I don't know if a lot of people know this, but 40 Act funds, the mutual funds who own a lot of venture positions, can only own about 10% privates. And in order to keep their private like mark to market the right way and make sure it's not over 10%, where they would have to sell some of their position, they have to mark down their pricing. And so you've seen some huge price cuts, in companies that are in sort of the crossover part of the market, which I think is interesting. So like Stripe's a good example, right? Stripe got cut by T. Rowe twice, and is now 80% is their value. They've cut their valuation by like almost 70%. And it's really just to keep their fund. And I don't know this for sure, but I imagine it's to keep so that their fund in line, so that their, the amount of Stripe shares that they own compared to the rest of the fund is not over the 10% marker. And I'm sure they have some kind of model that models it out for them. But, and so I think there's some huge opportunities there where these things are sort of trading in sympathy sell-offs, and there's some really great investment opportunities there. And so we've sort of been dialing in there. And the other part is obviously the Series B. I think, where we see, we have a model informed, like a machine learning informed process. And so we look at all these different sectors and industries and the rounds and the amount they've raised. And then we look at Google trends and Twitter trends and look at the positive and negative indicators from that perspective. We pull all that information in, and then it spits out a score. It's a lot more complicated than that, but and just so I don't absolutely do it injustice. And so what we found is that the Series B and C are just really great opportunities to get a high level of multiple on your capital without offering up a ton of risk, right? Like the failure rates on companies in the Series B, C are 33% and 25% respectively. So just a much higher likelihood of an exit or some kind of trade sale. And so we're obviously looking for on our side.
Pete, do you want to talk about what your clients are seeing?
Yeah, so KKR just put a fair amount of money into a client in the healthcare space. So healthcare, I think it's 1/7 of our economy. So we always see, especially with the aging population, a term that came up 6 months ago I never heard of, called the longevity space. As I get older, I'm 56. As I get older, I'm learning more about those technologies. So it's always going to be a big focus. Other areas we see, whether it's ESG or alternative plastics, environmental, company just, I told Marty about it last meeting, and nice say they got a really nice big check, and they make alternative products to plastic, where they use almond waste billions of pounds of almond waste coming from California each year that they're going to use to make alternative products. Other space that we see that we're excited about, you'll hear about DARPA tomorrow, as I mentioned. DARPA normally doesn't just invest alone. They get private companies to invest, as they'll tell you tomorrow. So obviously, national security, everything going on around the world is a major issue. Quantum computing, cybersecurity, things like that are really important. Weapon systems, the defense contractors are going to be busy for years to come. Psychedelics, Marty mentioned. And then two areas that are interesting to me, I'd say, in full disclosure, Bowery Farming is a vertical farming company that is a client of mine. We handle their intellectual property. They get around 400 million in funding, but you're going to see these vertical farming companies really sprouting up around the world because of all the concerns, literally sprouting up around the world because of all the concerns with climate change, pesticides, water, energy. Anybody reading about California, just get a steady source of energy these days is quite challenging. So we see that cropping up, sprouting up, whatever you want to say, in the U.S. and around the world. Then the other one that's just more, the last one I'd say, Dino is sitting here in the real estate area that's fascinating to me is I read a lot about WeWork, watched the TV shows. There's a great book if anybody's interested in the startup space called The Cult of We. So I'm particularly fascinated by Adam Newman. Many of you may have heard that he started a new residential real estate company called Flow. And many of you also may have heard he got $350 million investment from Andreessen Horowitz. So I am fascinated. I think I used the word fascinated yesterday, and Pat said there could be other words we can use.
Couple different words that you might think of.
Yeah, a couple different words, but
With an F.
With an F, yeah.
It's pretty tough to watch people who do really, and not that Adam Newman has done a lot of things. I think he's also done a decent job with WeWork until he didn't, right? Like, I think, but it's crazy to me how many people don't get funded. Like we talked about the Valley of Death and
and other places.
And now we're getting some people getting $1 billion, like a couple $100 million here there. And like I said, that kind of goes back to our first point, which is it's who you know a lot of times, or who you know who knows somebody, and who can introduce you to somebody. So, they back somebody they know, which is really important.
Well, I mean, I guess the argument with him is that it's hard to create $1 billion company, and he has, right?
Yeah.
Well, the mega deals I found are sort of like sold by very charismatic people with a business plan that's about 2 pages long. And it simply paints a big picture concept. Mm-hmm. And capital flows in like water. Because they're so imbued and so insistent and so charismatic that people cannot believe that in fact this cannot be done. Now the trouble is that with Musk and others like that, Newman, these can be done because they're simply inanimate. They're engineering concepts, and engineering is very malleable to redesign and retry and reshaping. In the healthcare business, like Elizabeth Holmes, that's a different story. Yeah. That's when you meet biology, and biology has a very, very different, working environment in terms of proof of concept.
It's interesting about Elizabeth Holmes because most of the healthcare executives say that none of them knew anybody who invested. It was all people outside of healthcare, right? Correct. Yeah, so that tells you what framework she's.
But I mean, there's a great series on The Dropout, and I read the books on her. I mean, she made it to a $9 billion valuation. Walgreens, a lot of companies invested in her. Paper, and George Schultz and her board was top people in the country. Henry Kissinger. I don't know what they know about healthcare, but she faked it. It's a $9 billion valuation. I mean, yeah. So
look how old Henry is. He's done a good job with healthcare.
Yeah.
So I think there's a great discussion about, and maybe we've got just a couple minutes left about the New York ecosystem because California VCs always say we love to invest in New York stuff because New York valuations seem to be really crammed down all the time because all the guys come out of Wall Street who are doing VC in New York, so they tend to use fundamental, whereas California basis is based on what does something look at scale, based rather than on the existing fundamentals, right? The growth curve, right? Yeah. So, any thoughts about that? Like, are you seeing New York become more robust?
Well, I'm in New York, so I'll let Lale jump in after me. But I know you go back and forth between Dubai and New York. But what I'd say about New York is it's a great. Obviously, it's known for Wall Street. Years ago, going back to Bloomberg, they really tried to diversify, and I think they're doing a good job. You have the Alexandria facilities over here. You have NYU a few blocks away. You have Mount Sinai. You have Weill Cornell. You have Columbia. There is a lot of really good startup activity here.
International.
And that leads to the Middle East and Israel and other countries. So New York, I think, is very exciting. As far as them scrutinizing deal flows, I mean, I think everyone is. But New York is very exciting from that standpoint, where years ago it was just Wall Street. Now I think university spin-outs and others are doing some great things.
Yeah, I echo that. I think especially actually in the last 2 years, I feel that it's really become a stronger ecosystem. And that's really good to see because then, there's a dearth of talent that sits there. And to have it now executing on these ideas and businesses and getting sort of parachuted in as well as getting focus is really good to see because we need that.
So Pat, you actually spend time in multiple places.
Yep.
I seem to be. And so what's your view on this, and maybe touch on some of the other markets?
Yeah, I mean, I'm fortunate enough to have sort of LPs and families that I work with, and the major family is actually in New York. That is the principal. So, it's tough because I'm sort of biased because I'm in LA, and which is it's 75, 80 degrees all the time here. So nobody really works, I feel a little bit weird sometimes when I'm like, oh yeah, I'm working on a Friday, and which is bizarre. Yeah, I know. So no, I think New York definitely has a level of criticism that I think is natural based on just sort of being in the city and seeing so many things and also working with businesses the type of businesses that you do, the financial services business. Whereas, we have LA is much more media and tech oriented. And then obviously San Francisco is sort of tech oriented, where I think there's probably a little bit of an untapped market is definitely in the Texas area and in the Florida area. I think that there's a lot of opportunities there, just generally speaking. And it's definitely part of what I'm trying to do is be it. I was in Texas and I was in Houston and Dallas and Austin for the last week or so. I plan on going to Miami, which is not news to anybody because everybody goes to Miami now. But it's good to make sure that I'm, you're bouncing around the right circles there, because I think there's lots of opportunities there. There's a lot of great people there. There's also not great people there, just like there is anywhere else. And then obviously spending a lot of my time in New York, because those are the people I get along with the most also, because I'm a New Yorker. I'm a former New Yorker. So if you can't tell from the way I speak. Yeah.
As long as we don't use the word talk, if we say speak, people
talk.
Say talk. That's where they know we're from.
John had a question.
Yeah, I wanted to ask Lale, to what extent is the sovereign wealth around the Emirates and the Gulf now beginning to take in venture capital as a part of their asset allocation? Because in the past, they were very sort of asset.
Sorry, I'm having a hard trouble hearing you. So if I could just ask you to
project.
Turn up.
Oh, there's Mike. I'm sorry. To what extent is now the
thank you
sovereign wealth and other wealth in the Gulf and the Emirates veering towards venture capital? Is it becoming a common now that it would do? Because in the past they were somewhat leery of venture capital. They were very much into major projects and real estate, engineering, ports, and that sort of thing.
Yeah, so I'll give you two different markets, shared stories of two different markets. One is Saudi, so they have a 2030 vision, and they have a clear platform around healthcare. And then even bolder than that, they've decided that, for example, in Riyadh, it should be a biotech city. So right now, you know, there's a lot of conversation I'm having with respect to what does that really mean. And it's about actually creating an ecosystem that's starting from the bench onwards, and then introducing funds into the ecosystem. So there's both not only the capital available, but then there's actually places to deploy that capital. The same goes for the UAE, which also happens to have a 2030 vision. And as part of that, they're doing a lot of work in actually setting up incubators and accelerators. And so, for example, 500 Startup is here, and they go through their program, and they've done this a few times now and becoming quite sophisticated. So you have this arbitrage sort of element going on where Western or US, Boston, San Francisco, New York players are now finding an appetite in these markets because there's actual desire to have feet on the ground and draw that. So it's a very interesting time from that perspective that's happening in these markets.
The only thing I'd add to that is we're doing work with Qatar Sovereign Wealth Fund. They got $600 billion under management, and they want a lot of healthcare. So we give them, feed them deal flow in that area. But keep in mind, everyone probably knows Masa Yossi from was it SoftBank. When he created that $100 billion fund and invested years ago, the majority of that money came from Saudi Arabia. So so they're doing a lot of funding, whether it's venture, if you want to call it. I think it's you know, that's to be debated, but they are doing a lot of funding, and there's even more money now because of all the increase in the oil prices and so on.
And I think
and the desire to move out of the, you know, out of oil, right? They're looking to diversify their economy.
They're getting into golf and to live golf. That's what they want.